Okay, welcome back to our unit on net income. Last video we talked about how to find out how much federal income tax you'll be paying. In today's video we're going to be talking about how to find how much state income tax you'll be paying. So federal obviously means like the national government, what you're paying to Washington, D.C. State income, that's just going to, in our case, New York. So our goal for today is to learn how to calculate state taxes on a straight percent basis. This is usually a little bit different from your federal taxes, okay? The process is different, but the idea is the same. We're paying money to the state government so we can have things like schools, government workers, roads, airports, all the things that we want in a society but are very, very expensive. So all of us pay for it. The one vocabulary term that you're going to have to know before we talk about state taxes is personal exemptions. And this is very similar to what we looked at in the last topic, which was withholding allowances. What a personal exemption is it's an earning, or it's part of your earnings, based on the number of people and employee supports that are not taxable. So it's very similar to withholding allowances. Withholding allowances was for the more people that you were supporting, the more people in your family, in your household, the less you had to pay per week in federal income tax. Now, you could say that you had allowances up to the number of people in your family. You could also claim fewer if you want to get some money back in your tax return. Personal exemptions is along the same lines, but it's a little different. It is an amount of money in your earnings, how much you make, that is not taxable. You can't pay taxes on it. What the state government does is it recognizes that as a taxpayer, you are paying money to the state government, but if you have a family, then you need money to support them. So the more people in your family and the status of your family or your own self, whether you're single or married, actually makes a difference. They will give you an exemption. They'll give you some money that is not taxable. Okay? And you'll see how that works in just a little bit. We're going to have a couple of formulas that you have to know this time. There will be some math in this particular topic, but it's not too hard. The first thing you're going to have to calculate is the taxable wages. The taxable wages are calculated by taking your annual gross salary, that just means how much you make in 1 year, and subtracting from that the sum of your personal exemptions. Remember, we just talked about that, how the earnings that are not taxable. And after you've gotten the taxable wages, you calculate your annual tax withheld for state income tax by taking your taxable wages and multiplying by the tax rate. And I'm going to put in parentheses the tax rate as a decimal. Now, the first thing we're going to need to do is learn how to calculate personal exemption amounts, okay? For the sake of our examples on the notes and our homework, we're going to say that personal exemption amounts for practice problems and homework are as follows, unless you see otherwise. For someone who is single, they get an exemption of $1,500. For someone who is married, they get an exemption of $3,000. And for each dependent that they claim, $700. That usually means non-working adults or children. So, first example. Patricia Line's gross pay is $65,800 a year. The state income tax rate is 3% of taxable wages. Line takes a married exemption for herself and her husband. Use the personal exemptions table above to find out how much is withheld from her gross earnings for state income tax within the year. Step 1 to figure out how much is withheld, how much state income tax she pays, is to find the taxable wages. We find the taxable wages by taking the annual gross salary and subtracting the personal exemptions. So, in this case, her annual gross salary is $65,800. We're going to subtract from that her exemption, the married exemption that she takes for being married. It doesn't say anything about any dependents, and she's not single, so she gets the married exemption. That's $3,000. $65,800 minus $3,000 is $62,800. Again, this is the taxable wage. She actually makes, and we're not taking money away from her, she is making $65,800 a year before taxes. For this particular tax, there is a $3,000 exemption. That means $3,000 of those $65,800 is not taxable. What's left over is taxable, $62,800. Now, we find the annual tax withheld for state income taxes by taking the taxable wage of $62,800 and multiplying it by the tax rate written as a decimal. Tax rate is 3%. To get a decimal out of that, I take 3 and I divide it by 100. I get 0.03. I just converted a percent to a decimal. 0.03 times 62,800. She must pay every year $1,884 in state income taxes. Okay? That's how much she pays for 1 year. Now, if it said how much did she pay per paycheck, let's say maybe she has a weekly paycheck, you could go and figure that out by dividing that by 52 or however many weeks that she ends up working. So again, the point of this is we find the taxable wages first because that's the amount that she's getting taxed on. $3,000 of what she makes, she was not taxed on. Again, we're not taking money away from her. The taxable wage is just like you don't have to pay taxes on some of your money. Okay? So it's important to know how much you're getting from those personal exemptions. In this case, it was just $3,000. Oh, I'm sorry if you couldn't see that. Okay, let's do a couple more practice examples. Number 1, use the personal exemptions table in example 1 above to find the amount withheld. Tomoko Nakazawa earns $38,657 annually. She's married with no dependents. What are her personal exemptions? Well, so this question is just asking about personal exemptions. It doesn't ask about how much she has to pay in income tax at all. She's married with no dependents. That's the exact same case that we had before. And we saw that the married exemption was $3,000. So this is an easy one. Okay, make sure to read the question. It's not asking anything more important or more difficult than what are her exemptions. $3,000. Let's move on to number 2. Paul Ciamello earns $168,000. He is single. His personal exemptions include himself and his 5 children. The state tax rate is 2.5% of taxable income. What amount is withheld yearly for state income tax? So this time, we're going to figure out the exemptions first, just like we did before, but this time it's going to be a little more difficult. He has a single exemption, because it says he's single, and his 5 children. That's 5 dependents. So his exemptions are the $1,500, $1,500 single exemption, plus 5 $700 exemptions. Okay? Remember, each dependent, we're going to say, gets an exemption of $700 towards that, towards the personal exemptions total. And if he's single, that's $1,500. So, how much of his, how big are his total personal exemptions? Well, 5 times 700 is 3,500. So we have 1,500 plus 3,500 equals $5,000. That is money that cannot be taxed. In order to find the taxable wages, we take his total gross pay, his annual gross pay, $168,000, and we subtract the total of the personal exemptions, the $5,000. That means that his taxable wages are $163,000. Now, that's not how much money he has to pay in taxes. That's just the money that can be taxed. The state tax is calculated by taking his taxable wages, $163,000, and multiplying by the state tax rate, 2.5%. Again, 2.5%, we need to change it to a decimal. We divide it by 100, and that's 0.025. So we multiply 163,000 times 0.025, and we get that Paul has to pay $4,075 in state taxes every year. Okay? So, again, the steps are find the total of the personal exemptions, find the taxable wage, and then calculate the state tax. The directions and equations are right in these notes, okay? It's pretty straightforward. Make sure you're reading these problems very carefully because sometimes they will throw in wording to try to trick you. If you have any questions on this, let me know. Until next time, have a nice day. I'll see you later.